2014 World Entrepreneur of the Year, Uday Kotak.
Uday Kotak.
Uday Kotak.
Uday Kotak. Uday Kotak.
Uday Kotak.
What if I told you that the secret to becoming one of India's richest bankers wasn't aggressive risk-taking or flashy deals, but patience, discipline, and something most entrepreneurs ignore: restraint. Today, we're diving into the story of Uday Kotak, a man who grew up in a household of 60 people, started with less than $80,000, and built one of India's most trusted banks through a philosophy that goes against everything modern entrepreneurship preaches. Welcome to Periscope. Let's explore how quiet compounding beats loud ambition. A baby boy was born into a large Gujarati family, Uday Suresh Kotak. He grew up in a sprawling joint household of nearly 60 people under one roof. In that house, wealth was not an abstract concept discussed in textbooks. It was lived, negotiated, protected. And in the middle of constant negotiation between personal ambition and family responsibility, young Uday absorbed a lesson most business school graduates never truly learn: how to grow without breaking the collective, how to seek profit without losing harmony, how to lead without needing to dominate. Years later, he would compress that entire childhood into a single line that would come to define his philosophy: capitalism at work, socialism at home. The Kotak family had already built a trading legacy that stretched across Gujarat, Karachi, and Mumbai. Business was not a curiosity in the household, it was the bloodstream. But Uday wasn't shaped by commerce alone. He showed an early sharpness for mathematics, the kind of analytical precision that would later allow him to see what others missed in financial systems. He captained his school and college cricket teams, learning the quiet authority of leadership and the discipline of teamwork. And while many discovered success by chance, Uday trained for it deliberately. First at Sydenham College, studying commerce, and then at the elite Jamnalal Bajaj Institute of Management Studies, where he earned his MBA in 1982. By the time he stepped out into the world, Uday Kotak did not carry just a degree. He carried a philosophy, built in a crowded home, sharpened on a cricket field, and refined in the language of numbers. Here's where most stories would have Uday joining a prestigious multinational company. That was the dream for every MBA graduate in India in 1982. The safe path, the respected path. But Uday chose differently. With his father's blessing and a small office space, the 23-year-old decided to become an entrepreneur. Not with fanfare, not with grand announcements. Quietly, deliberately. This wasn't reckless ambition. This was calculated courage rooted in observation. Uday had spotted something others missed: a massive gap in India's financial system. Banks were paying depositors 6% interest but charging borrowers 16%, a 10 percentage point spread. Most people saw banking. Uday saw an opportunity. He launched a simple trade finance venture. He convinced friends and family to lend him money at 12%, double what banks offered. Then he loaned that money to businesses at rates lower than banks but higher than what he paid. Everyone won. His investors earned more, businesses paid less, and Uday made a profit in the middle. One of his first deals was with Nelco, a Tata subsidiary. He offered them working capital at 12%, significantly cheaper than banks. The deal succeeded. Word spread. The quiet kid from the house of 60 had found his path. Not through noise, through value. In 1985, at just 26 years old, Uday Kotak formally founded Kotak Capital Management Finance. His seed capital? Less than $80,000, about 30 lakh rupees, gathered from friends and relatives. No venture capital, no bank loans, just trust from people who believed in him. That same year, he married Pallavi Kotak. And here's something crucial. Pallavi didn't just support his dream. She actively encouraged him to take the entrepreneurial leap rather than settling for a comfortable job. Behind every great builder is often someone who believes before the results appear. Then came 1986. Industrialist Anand Mahindra invested in the venture. Uday retained 50% ownership and renamed the company Kotak Mahindra Finance. This wasn't just money, it was validation, credibility, and access. But here's what made Uday different. He wasn't in a hurry. While others chased quick wins, Uday focused on sustainable growth. Through the late 1980s, Kotak Mahindra methodically expanded from bill discounting into leasing and hire purchase financing. Each step calculated, each move deliberate. As the 1990s arrived and India's economy opened up, Uday made a decision that showcased his wisdom. He would learn from the best, even if it meant giving up equity. In 1991, Kotak Mahindra partnered with Ford Credit for auto financing. In 1992, Goldman Sachs took a 25% stake in his investment banking business. Later, Old Mutual partnered for life insurance. Most entrepreneurs clutch their equity like treasure. Uday saw something deeper. Knowledge compounds faster than ownership. We learned a great deal from each of our partners, he later reflected. The technology, the processes, the global best practices. These were worth more than maintaining 100% of a smaller business. Through the 1990s, the expansion continued, methodically. 1991, acquired Ficom for retail distribution. Mid-1990s, launched Kotak Securities and Investment Banking. 1998, entered mutual funds with Kotak Mahindra Asset Management. 2000, partnered with Old Mutual for life insurance. Notice the pattern? Enter a sector, partner with experts, learn, compound. By 2000, Kotak Mahindra had transformed from a small bill discounting shop into a diversified financial services conglomerate. Not through aggressive risk, through intelligent compounding. In 2003, Uday Kotak achieved something historic. Kotak Mahindra Finance became the first Indian non-banking finance company to ever receive a banking license and convert into a full commercial bank. Kotak Mahindra Bank was born. This was transformative. Now he could take deposits, offer loans, and consolidate all his financial services under one platform. But with this power came a choice that would define his legacy. How aggressive would he be? Remember those partnerships Uday had formed in the 1990s? As the 2000s progressed and his team had absorbed the expertise, Uday began systematically buying back control. 2005, bought out Ford's stake in car finance. 2006, purchased Goldman Sachs' 25% stake for $72 million. Over time, bought back Old Mutual share in life insurance. This wasn't hostile takeover strategy. This was planned succession. He had learned what he needed. Now it was time to fly solo. But here's the crucial part. Even as Kotak Mahindra Bank grew rapidly, Uday never abandoned his core philosophy. He often said, banking is about common sense. Can this loan be repaid? Simple, powerful, restraint. The 2014 masterstroke. November 2014. Uday orchestrated the acquisition of ING Vysya Bank in an all-stock deal worth $2.4 billion, one of the largest banking mergers in Indian history. Overnight, Kotak Mahindra's customer base nearly doubled. The branch network exploded. The bank became the fourth largest private bank in India. Uday's personal fortune almost doubled. Forbes would later rank him 18th among India's wealthiest with a net worth of $14.1 billion, India's richest banker. But wealth wasn't the goal. Institution building was. The digital pivot. After India's dramatic demonetization in 2016, many banks struggled. Uday saw opportunity. Kotak Mahindra launched Kotak 811, a completely digital savings account platform. Customers could open accounts entirely online. No branches needed. By 2022, Kotak 811 accounted for 30% of the bank's savings accounts. While others resisted digital transformation, Uday embraced it, but carefully, with proper risk controls. The IL&FS crisis. In 2018 to 2019, infrastructure finance company IL&FS collapsed, threatening India's entire financial system. The government needed someone trustworthy to help resolve the crisis. They called Uday Kotak. Why? Because during the industry-wide bad debt crisis of 2015 to 2018, when banks across India struggled with non-performing assets reaching double digits, Kotak Mahindra Bank kept its gross NPAs below 2%. 2%, while competitors bled. This wasn't luck. This was the result of consistent discipline. Every loan decision, every risk assessment, every restraint exercised over 2 decades. Uday became the go-to banker for crises because he had built something rare: trust through consistency. He served as president of the Confederation of Indian Industry in 2020 to 2021, representing not just his bank but the entire industry. By the late 2010s, Kotak Mahindra Bank had grown to over 1,400 branches and 14 million customers. The quiet kid from the house of 60 had become the voice of Indian banking. September 1st, 2023. Uday Kotak resigned as Managing Director and CEO of Kotak Mahindra Bank. Not because he had to. He had 4 months left in his term. Because he chose to. In his resignation letter, he wrote about mulling over this decision for some time and feeling that an early exit was right for the institution. Think about that. After building the company for 38 years from absolute scratch, he voluntarily stepped aside early to ensure his shadow didn't loom over the next leader. Founders go away, but the institution flourishes into perpetuity, he wrote. This wasn't retirement. This was evolution. He remained on the board as a non-executive director and continues as the single largest shareholder. But operationally, he stepped back. In January 2024, Ashok Vaswani took over as MD and CEO, an external appointment with global banking experience from Barclays and Citigroup. Many expected an internal candidate. Some speculated about family succession. But Uday chose the professional manager with the best credentials. Why? Because the institution mattered more than ego, more than family control, more than personal legacy. Uday once said his ambition was to build an institution that would last 100 years into the future, like JP Morgan or Goldman Sachs, banks that outlived their founders. He meant it. Even after stepping down, Uday remains deeply engaged. In August 2023, he consolidated alternate asset management businesses into Kotak Alternate Asset Managers, launching with $18 billion in assets, one of India's largest. In 2024, the bank sold 70% of its general insurance arm to Zurich Insurance for 5,560 crore rupees, retaining 30%. Full circle to his partnership strategy from the 1990s. By late 2025, as Kotak Mahindra Bank celebrated its 40th anniversary, Uday outlined his vision. Only the fittest players will adapt and survive in the changing financial landscape. He has transitioned from operator to statesman, advising policy, mentoring leaders, championing India's growth story globally. That's the Uday Kotak way. And that's how one of India's greatest bankers built an empire that will outlive him. If this story of patience, discipline, and long-term thinking resonated with you, hit that like button and subscribe to Periscope for more deep dives into entrepreneurial journeys that challenge conventional wisdom. Drop a comment below. In a world that celebrates aggressive risk-taking, what's one area where you could practice more restraint? Where could slow compounding beat fast speculation in your life? Thanks for watching, and remember, the quiet builders often leave the loudest legacies.